why Bitcoin is going to have to hit $10 million per Bitcoin. This is the most painful video I've ever had to make, but it has to be explained because if you don't know why Bitcoin's going to have to hit $10 million each, meaning Ethereum's going to hit about $100,000 each. If you don't understand the mechanisms that drive this, you're just going to stay in the begging class forever. And I don't care if you're already a millionaire, you're going to start begging. You're going to have to stand in soup lines. You're going to have to get welfare. You're going to have to get food stamps if you don't understand why Bitcoin's going to hit $10 million each. And quickly. Doing this video is so painful and excruciating, and you're going to see why as I go through it. Let's do it. To understand this, you also have to understand this first. Why the rich get richer and the poor get poorer. If you understand the mechanics of how money works, are you going to be able to get rich? No guarantees. I can't guarantee that it's going to help you get rich. But I guarantee this though. If you don't understand this, you will never ever get rich. What I'm telling you is that it's impossible to get rich without understanding how money actually works. If you had known this, if I had known this 15 years ago, I had hundreds of Bitcoin. Maybe even close to 2,000 Bitcoin at some point. I wouldn't have sold a single Satoshi. I would have quit my job, whatever it was, just went to work at 7-Eleven and made $7 an hour and just lived in the back of my Ford Bronco or Explorer and just stacked more Satoshis. That's what I would have done 15, 20 years ago. But I didn't, because I didn't understand this, because I didn't understand this. All right, let's first deal with why Bitcoin hit $110,000-ish, whereas Ethereum is just constantly dumping. This is M2 money supply. And it looks like we have a huge map here, huge move here, but look, this is actually from September 2022 to January 2024, just about 5%, 4.9%, 4.9%. 4.9% was enough to cause Bitcoin to go almost triple in value, almost 300%. What was Bitcoin like, $40,000 or something? In January 2024, and M2 money supply increases, causing Bitcoin's price to double? I had to double check. Sorry, I was wrong. This is Bitcoin price from bottom to top. It actually hit 500%. 500% in the time that M2 money supply went from here to here to here, 5%. Versus 500%. What I'm telling you is that there's a direct correlation. There's a causation, not just a correlation. There's a causation between M2 money supply and the price of Bitcoin and why everyone's having such a hard time retiring. And I'm going to explain why. But to do that, we're going to have to zoom out of this particular chart. You're going to watch me zoom out of this chart. Watch me zoom out of this chart, okay? What are all these other things, Uncle? Let's see. You're going to watch me zoom out of this chart. And this is a monthly chart, so I'm actually going back an entire... Holy shit, what the hell is this chart? This is the chart. What does it look like to you? What does this damn chart look like to you? If you guessed parabola, you'd be wrong because it's accelerating even faster than the parabola. All right, so for reference, this is Bitcoin, and this is when Bitcoin started. This long orange line is where Bitcoin started. Okay, ready for this? Okay, look, I changed the color for you so you can see it better. It's red now, okay? And remember, we were zoomed into this, just this tiny little 5% section that caused Bitcoin's price to go 5x in value from, what did it say was like 20-something thousand dollars to $100,000 within just about 12 months, 13, 14 months. But to understand why it did that and what's going to happen next, and for you to start thinking about how you can retire and how you can make your FU money, you have to understand this entire curve because it all started right here. In 1971, and I'm telling you, if you don't understand this, you cannot become rich. You cannot retire. If you do understand this, you might be able to get rich. You might be able to retire. But if you don't understand this, it's absolutely impossible. This is the only snowflake's chance in hell. Understanding this chart is the only snowflake's chance in hell that you're going to be able to retire. And I'm so worked up over this because you know me, you know how hard I work, you know how much I research, you know how hard I think. If I had known this, oh man, I didn't know this, and I'm just livid because nobody taught me this. And I had to figure this out on my own, which is why I didn't hold on to my hundreds of Bitcoin okay, it all started in 1971. Bretton Woods gold dollar relationship got destroyed. I think it was Nixon back then that said, all right, we don't have to have an equal amount of gold for every dollar. That's when the central bankers became powerful. And by central bankers, you know who I'm talking about. This is why Trump, even today, is shit-talking and bad-mouthing Powell. Because the U.S. Treasury, which is not a part of the Federal Reserve Bank, which is not a part of the United States, and the U.S. government are completely independent. And it happened right here. It happened right there in 1971-ish when they became independent. What they said was the president should not have the right to determine how money is used in the country. What a stupid decision. Absolutely. This is like saying the people, the citizens that voted for the president shouldn't have any say over how the money gets spent. So why was this a good idea? Because it sounded like a good idea because the people that had the money were able to convince congressmen and senators that, hey, we should just destroy the Bretton Woods policies and just institute a new central bank that's independent from the executive or even the legislative branch of government so that we can do our own thing. And guess what happened next? As soon as you didn't have to start worrying about, do you have enough gold to back up the dollars that you're printing right now? Guess what they decided to do? Let's just M2 money supply. And this bitch happened. This is what happened. They started printing money like crazy. Meanwhile, let's look at the context as to what went up. Coca-Cola price went up, stock. Apple price went up. Apple started right around here, I think. Microsoft started right around here-ish. Everything started doing this parabola thing except your money. You know who started doing the parabola thing and actually really made a lot of money? These guys, the GSTT guys. What the hell is a Bretton Woods and what the hell is a GSTT? These two things changed the world and caused this to happen, backed by the central bankers who made this happen. Step by step. Let's explain this. GSTT is back in the 70s. Back in the 70s, you were allowed generation skipping tax trust. Generation skipping tax trust. You were allowed to skip a generation of taxes. So right now, if your dad, heaven forbid, dies and he has $5 million, guess how much money comes to you? After all the lawyers and taxes are paid, $5 million? You get maybe $1 million. About 80%. The worst rug pull on Bitcoin is about 80%. It destroys lives. Your entire net worth from your father goes to lawyers and your country. If you're American, America, or Canada, Canadian. You get nothing. But back in the 70s, back in the early 70s, there was this thing called a trust that was a generation skipping tax trust where rich people, and remember, you don't have many brothers or sisters. Your dad, however, had many brothers or sisters, right? So they had all this property back from the 50s and 60s and 70s, and they had all this stock, they had all this money, even cash and gold, back from the 60s and 70s that you didn't have to get taxed on at all. At the same time, since you didn't have to get taxed on it, but since they knew that the dollars were going to get printed because they knew that the Bretton Woods thing was over, these guys, these wise old foxes that you call boomers now, what they decided to do was put their money in a trust, and then they decided to tell the politicians, from now on, let's destroy the GSTT thing. And instead, let's make 401ks a thing. Right at the same time that the Bretton Woods thing disappeared, about a year or two later, a couple years later, GSTT was grandfathered in, and then you couldn't do this anymore. From this point on, when you have a trust, you have to pay taxes when people die. So you can't pass on generational wealth. And right about this time, they decided, well, since you're going to print more dollars because you don't have to have any gold, and since the executive doesn't have any control over the central bank's going to press a bunch of dollars. So let's start 401ks and not be taxed on it, but let's start 401ks where everyone contributes money into the 401k. They get taxed, we don't, but that's okay because what we did was we bought Apple stock. That's okay because what we did was we bought Microsoft stock, and we're not going to get taxed on it, whereas everybody else is going to get natural contributions. So 10% in the company itself is going to contribute another 10%. So the gross revenues, the GDP of every single corporation, about 20% of that is going to compound every single month into the stocks that we are grandfathered into without having to pay tax at all. Not just me, my brothers, my 5 brothers and my 3 sisters, and their siblings and elders and everything. We're tax free, and you're going to buy shit that I bought first, and you're going to pay taxes while I'm not paying taxes. So go ahead, central bank, print them out of the US dollar. And guess what they did? They did exactly that. And while you're at it, let's start the women's lib movement. So what ends up happening is there's twice as many people now that can put money into a 401k and pay taxes on it and pump up the price of our stocks that we're not paying taxes on, that we bought about 4 or 5 years before you. Are you starting to get really, really pissed off now as to what happened during the 70s? The Nixon era politicians and the central bankers were complicit in making this happen. Since you don't have to have enough gold to back all the dollars, which let's do a Fort Knox audit. Yeah, that's a great idea. So don't they do an audit every year? Hush. Hush. Right about this time, hey, the internet started and manufacturing, global manufacturing has started. Let's start NAFTA, because what we need to do is build more. We need to manufacture more. We need to make more because the Japanese are getting rich. Let's start NAFTA and manufacture shit. Oh, wait a second. You mean to tell me Mexicans, they don't show up to work? Well, what does that mean? But we're paying them real pesos. And right about here, they had the peso catastrophe. Literally had the peso catastrophe. Mexicans don't want to actually show up on the... Right about then, Hong Kong goes back to China. Now China is whole. China is made whole, and all the corruption money from east to west has to stop. And since Mexico manufacturing didn't quite work out the way they expected, guess what happened? A couple years later, this is the Chinese industrial boom. Right here, happened in 1998, 1997. It's not that long ago. End of the 1900s, 1997 and 8, the Chinese industrial boom started. Oh, and you know what happened next? Xi Jinping took power and decided and promised to root out all corruption. At the same time, Bitcoin was born, right around 10 cents each. I don't know why I didn't mention Xi Jinping in here, but Xi Jinping is in here, decided to root out all corruption. Bitcoin is born, and about 6 months after Bitcoin is born, green cards for Chinese high net worth individuals skyrocketed in Canada and in America. I wonder why. I mean, Xi Jinping, right here, the only that I didn't put in, the only thing Xi Jinping said was that he's going to arrest everybody who is involved in corruption with Europe, England, and the United States, and told the Americans where to buy land before we actually built Shenzhen, the ports of Shenzhen, the free trade ports, before we built in specific railroad stops, subway stops, where we were going to build in new, and told all the American developers and all the American investors the exact GPS coordinates of where we're going to install new cities before anybody else knew, so that the Americans could go in and buy in, or partner with other Chinese people to buy in these properties and have all these deals for rare earth minerals. All those guys, all Xi Jinping said was that we're just going to arrest you and fire bomb you in your belly, in your brain, and just kill you and your whole family. That's all Xi Jinping said. So, I mean, why would the Chinese people all of a sudden in January 09, this is literally January 09. This is in the 2000s. This is like a year before 2010. This is when Bitcoin was actually born. So why would Chinese people be worried about having bullets the size of hamburgers enter their forehead? Why would they get so many green cards? Well, they did. It boggles the mind as to why they would want to leave China. But the only way they could leave China, because the most money you could take out of China was $10,000 US equivalent. And suddenly Bitcoin went from 10 cents each. Suddenly in the next, how many years is this? It's like 3 or 4 years. Bitcoin went up to $1,000. 10,000% increase in a couple of years. Oh, and this is when Xi Jinping officially told the whole world that he's going to start an anti-corruption campaign. This is when the anti-corruption campaign started. This is when Xi Jinping took power as the chairman of something. And then suddenly, Bitcoin price goes up 10,000%. And all these Chinese people are in Vancouver, in Irvine, California, in London, which is weird. Really good Chinese food. Suddenly, my Chinese laundry guy is gone. Suddenly, I call the Chinese delivery restaurant, and they don't pick up the phone, which is really weird. If you don't know that this is when Operation Fox Hunt happened, and they actually sent Chinese spies to Irvine, to Toronto, to Vancouver, to London, to actually arrest and deport Chinese people who've been living there on a green card that secretly have $700 million worth of Bitcoin. They arrested them. And guess what they did? They made bullets about this big. Enter their mouth and their foreheads and their bellies and their hearts. As soon as that started happening, Bitcoin hit $17,000. All the while, since you don't have to have enough gold for every dollar, the central bank says, hey, we don't have to ask the president. We don't have to ask Carter. We don't have to ask Reagan. We don't have to ask Bush. We don't have to ask Clinton. We don't have to ask Bush again. We don't have to ask Obama. We don't have to ask Trump. And we don't have to ask, what's his name? The insane guy, the dementia guy, Biden. And so they just kept on printing dollars. They literally kept on printing dollars. And now Bitcoin hit $17,000, then Bitcoin hit $110,000. That's actually what happened. So, you're seeing what happened historically. I'm going to show you what happened to your actual dollars, though, okay? This is what happened that caused Bitcoin's price to go from, where is it? 10 cents. Literally, Bitcoin's price went from 10 cents to $110,000. And there's no end to this. There's literally no end to this. But you know why there's no end to it? And I'm going to show you the scale now. Let's not talk about historics, but let's talk about the impact on your wallet and your future now, that you understand what the is driving the price of Bitcoin and specific stocks. Remember, specific stocks are being pushed by these guys in the 70s, and then this entire upthrust is being pushed by the central bankers. You can't even do this because these people are grandfathered in. You can't even start a trust and get the same tax breaks that they could. So what you have to do is you'd have to buy into a trust that's already 40 years old to get these kinds of advantages. So if you're born if your grandfather or your father didn't have one of these GSTT trusts, I mean, you're screwed. You're literally, you could be a brain surgeon and you're gonna get inflationed away. Oh, now I'm gonna show you how extreme that inflation awayness is. This entire thing, about 35 years, 4,000% more money printed. 4,000% more money printed. 4,000% more money printed. What that means is, let's say you had $400,000 back there. Let's say your parents were cool enough, nice enough to have $400,000. No, let's say they had $1 million. That's a great idea. Let's say they had $1 million back in 1975, 6, 7, whatever, to give you as an inheritance. Cool. Isn't that great? Now I'm an instant millionaire. I can retire and I'm set for life. Oh my God. The moment they die, you get $400,000. Well, at least I have $400,000. Now, if you had held cash, because they printed this much cash, they printed 4,000% more cash than at the time you got $400,000. That's 40x. $400,000 in the 70s divided by 40, you'd end up with $10,000. You have 1 month's salary. You started with $1 million, now you have 1 month's salary. You started with $1 million and now you have 1 month's salary. $10,000 is all you have left because of this. This is the price of hamburger patties. This is the price of ground beef. This is from it doesn't go back farther than 86. So it's not even like, it doesn't go back into the 70s. That's the 86. But if it did go back into the 70s, it would look like this. It would literally look like, I mean, even this is a parabola. Look at that. It would look like this. Anyway, from the 70s, the price of hamburger patties went up 20x. 20x. Now, you might think 20x, that's not nearly as bad as 40x, which is this thing, right? 40x, wow. 4,000%, 2,000%. I don't live on cash, I live on meat. I live on hamburger patties, so it's half as bad, okay? It's bad, but it's only half as bad. No. Because 30 years ago, your beef wasn't filled with fillers and wasn't transported in melting plastic, and the cows weren't fed GMO corn, and they don't put garbage trash and cardboard in your ground beef. Well, they do. They didn't. So not only did the price of your beef increase 20x, the value of your beef decreased 80%. So now it's like you're paying 100 times more for the same amount of beef. Plus, at least now you get the added value of carcinogens. Yay! And GMO things that make you lose your hair and your testosterone, whatever. And all this started when Nixon, or whoever the next president was, gave the power of money control to the central bank in the 70s. Well, I'm not in America. Nixon wasn't my president. Doesn't matter. You could be born in Europe. You could be born in Canada. Doesn't matter. Because what they did was America was the biggest buying consumer powerhouse, had the strongest GDP. And what the central bankers said was, "Hi, Mr. Japan. Hi, Mr. Korea. If you want to do business with America, you should probably follow the same fiscal policies of Americans, so that you're on the same page, so that you can speak the same language, so that we hook you up with the same SWIFT and ACH systems." Oh, you don't want to do that? You don't want to give power to your central bank so that they can suddenly inflate everything, the price of everything, and deflate the value of your currency? You don't want to give your central bank, that we can control, that much power? Well, I guess Americans with their credit cards and that little Visa logo or MasterCard or Amex, when they come visit Korea, when they come visit Canada, when they come visit France, I guess they can't buy anything. You're just going to have to accept checks that take 3 weeks to clear if you want Americans to buy from you. Absolutely livid making. Absolutely livid making. They printed so many more dollars. Now, then I'm going to explain to you the mechanics of printing dollars, okay? So that you don't just think, well, they print dollars, but I've never seen any of them. The dollars they supposedly, I've seen videos of them printing and photographs of them printing dollars, but I mean, does it really make that much of it? Yes, it does. And I'm going to show you how they print those dollars and how it directly influences you in a second. But bear with me on that. So basically, the key point here, because of these two factors, just because of these two factors alone, and then because of this, having retail, this is retail buying in after the insiders, having these forces at play was going to drive the price of something up higher, except for the fact that Bitcoin got lucky because it was just introduced right when Xi Jinping's anti-corruption thing was introduced. So Bitcoin suddenly got a major turbo rocket lift boost. Is there going to be another thing like Bitcoin? That's what you should be asking yourself right about now. As you ask that question, is it the AI thing? I'm going to touch on this for a second. Is it the AI thing? No, because AI is not democratized. During the internet boom, everything was democratized. You could actually start a website like Mark Cuban did and sell it to someone stupid like Yahoo when it was run by a woman. And this whole thing, remember, this is all stands for Women's Lib Movement, was also a part of this entire thing. Twice as many people contributing into the 401k. And especially from the perspective of a CEO, these are people that won't start competing businesses with you. If you have a man who works underneath you and he learns all your secrets, he's going to start a competing business. Women, she's just going to give you a BJ. That's it. So that's what brought us to today. Now I'm going to explain to you AI. The only people that are going to get rich from AI is Sam Altman. It's not democratized. It's not like you can say, hey, I opened my own AI here and here's the URL. No, you used to be able to do that with websites. Hey, I opened my own website. Come visit my website and sign up for that. You could make millions of dollars. I opened my own AI agent. Come visit, use my AI. Try it. What happened? Didn't we have an entire AI agent meme coin boom and bust? It only lasted like a month and a half. It's not democratized anymore. It's not open market anymore. It's all Sam Altman controlled. And well, can't we just tax Sam so that all the money he makes ends up going into UBI, a universal basic income for everybody, and everybody kumbayas again. Everybody has really good food to eat, and they have a nice government-built apartment they can live in. Sam is deciding to move OpenAI to Dubai or Saudi Arabia or something, so he doesn't have to pay taxes. Okay? There's no more opportunity anymore because of that. Now I'm going to explain to you how this actually happens, the actual process of printing money. When I say printing money, or when anybody says printing money, and this is the stuff that even the people that say printing money don't understand, what ends up happening is that the central bank buys back treasuries from banks, from Bank of America, from Merrill Lynch, from JP Morgan, from Citibank. They just buy back treasuries. And so what are treasuries? Treasuries are basically just guarantees to pay. It's just a debt note. It's just a promise. It's just a loan. And so they buy these rights to the loans back and say, here's cash. And now your bank, your local bank, and your local bank manager suddenly has $200 million cash. But since it's fractional reserve banking, they can loan out 10 times as much, so they can loan out $2 billion. Your local bank manager can loan out $2 billion. So what ends up happening? Since they printed the money to buy the treasuries, and they bought the treasuries, and now the banks actually have cash that they can loan out at a 10 to 1 or 20 to 1 ratio. Now they've got $5 billion to loan out, and guess what they're going to do? Oh, I'm sure they'll be responsible. Bank managers, bank executives, they're going to be responsible with this. I mean, if they weren't going to be responsible, the U.S. government, the U.S. executive branch, wouldn't have given up the right to control the dollar or gold to the central bankers. But instead, what happens? You get a loan, you get a loan, you get a loan. Everybody gets loans, and what do they buy with those loans? Hey, your credit card limit? $10,000? To hell with that. Let's get you a $70,000 credit card loan limit. Line of credit, 3 credit cards. What could go wrong? Everybody buys up everything. Everybody buys up houses, they buy up cars, they buy up stereo systems, they buy up clothes. They buy up all sorts of ridiculous everythings. And now, well, guess what happens? Since I'm running out of things to sell, and China, which we mentioned here, can't manufacture things fast enough to ship over because shipping takes 3 months, because it used to only take 1 week if you could ship it from Mexico, but we know what happened to that. So now we have to wait 3 months. What ends up happening? So that I don't run out of stuff to sell you, I have to raise prices. So this is why a 50-cent hamburger patty now costs $9. And it's only got about 30% of its meat. The rest of it is who knows what's in there. That's how that works. So the central bank deciding to buy back treasuries from local banks and regional banks, and even national or international banks for whatever matter, frees up money so that consumers can just buy stuff, and the bank loan officer will just their incentive, they get a commission for how much money they loan you. Of course, pretty soon you're going to get that call from Anton. This is Anton from the Credit Services Department, and I wanted to remind you that your payment is due on the 15th. If you do not pay, if you do not comply with your... I've had that phone call happen to me, as you can tell. Now, what about Bitcoin? Why is Bitcoin going to hit $10 million? You remember I told you that here in this tiny little section here, that the Bitcoin ETF happened right when, at the bottom of the money supply disappearing. This is when the central bank tells the bankers, hey JP Morgan. So basically it would be Powell telling JP Morgan, hey JP Morgan, I'm going to give you 7% on a 10-year treasury. You buy this now, and I guarantee you 7% per year. And what's his face? Jamie Dimon gonna do? He's gonna go, holy shit, that's a great deal. Here, take all my money. Now, he gives all the money back to the central bank, the Federal Reserve. And you're trying to refinance your home now. I can't believe I'm paying 6% interest. And didn't they just lower the rates a little bit? Can't I refinance to 5.5% or maybe even 5% interest for my mortgage? Oh, I'm so sorry. We can't help you with that. We just sent all our money back to the Federal Reserve. That's how that works. Now, why is Bitcoin going to hit $10 million? At this exact point, when Bitcoin was like $30,000 or something, before it hit $100,000, this is when they started printing cash again. And so the rich people, these people way down here, remember these people, wow, this is cool how it just focused right on this area. These people? Anyway, those people right down there, the GSTT trust fund people, they're not like you and me. When they need money, they don't sell stuff. They don't use dollars. What they do is they get a loan against their equity. What equity? The equity that they have in their GSTT trusts, which is redundant because that would be generational skipping tax trust. They get a loan against this stuff. And the funny thing about it is, let's say they get a 3% interest rate loan. That 3% that they pay the bank is also deductible, tax deductible. They don't have to pay for that. So they don't have to sell any equities that are going up in value because they're buying more, and they made sure that the 401k people buy more. 401k people here. So what ends up happening is, let's say you had $1 million worth of Apple stock. Okay, you get a loan on that. You get a loan on $1 million worth of Apple stock, and the interest you pay on that, 3%. You got that loan so you could buy a house, or you could buy a yacht or a helicopter. It's in your interest, since your loan was valuated at $1 million worth of Apple stock. It's in your interest if after that valuation, stock goes up. So what do? You just get more of your fund manager buddies to buy more Apple stock. And guess what happens? Your loan is rated at $1 million worth of Apple stock, but by the time you pay the loan back, now Apple stock is worth $3 million. What does that mean exactly? You paid 3% interest, which is totally tax deductible, but now that Apple stock is worth $3 million instead of the $1 million at which your loan was evaluated or appraised. It's as if you got $1 million and you're repaying back $333,000. Does that make sense? You got this much money because your Apple stock was worth this much money, but by the time you repay it, Apple stock is worth this much money. So it's as if you're repaying this thing with this now. It's like, oh geez, this loan is so heavy, and it's just such a lot of money to pay back. And then by the time you actually have to pay it back, it's, sure, no problem. I'll pay this back like that. Is what ends up happening. And it's engineered this way by the GSTT people. Which is why Bitcoin's, I didn't touch on that yet. The reason why now Bitcoin is going to go up is because of the fact that the rich people, in order to buy anything, and everybody loves buying stuff, right? Everybody loves buying cars and yachts and girlfriends, second houses, and ninth girlfriend's 18th house. But they need to be able to take loans out against it, which is what they do because they're used to the value of their loan being small when they took the loan out against it. And so they're really smart. They're saying, okay, I'll just take a loan out against this thing. It's worthless. It's just Palantir stock from 2 years ago. I'll just take a loan out against my Tesla stock. It's 5 years ago. It's not worth much. That's what they do. And then suddenly it goes boom. They're like, I suppose it's time to pay the loan back. Is how they work. Now, they couldn't do that with Bitcoin because what are you going to do? My Bitcoin's worth $200 million. I would like $5 million. Here's my Trezor. Here's my Binance account password and username. Is that what they're going to do? No, they can't do that with Bitcoin. So what did they do? ETF. That's why the Bitcoin ETF is selling, because the Bitcoin ETF is confiscatable. The Bitcoin ETF, you can get an actual loan value appraisal against the Bitcoin that you hold in your ETF, but not in your Trezor or your what other wallet is there? Bitcoin wallet or Binance or Coinbase. You can't get a loan against that. And now, last week they just announced that, yay, now you can actually officially, JP Morgan, I think, did this. You can actually get a loan against your Bitcoin. Just announced last week. So now, that's why Bitcoin's going to go up, because these people down here, that's all they do. They buy shit that's going to go up, and then they get loans against it the moment they buy it, and then they force the price of this thing up so that they can easily pay back the loan that they got against this when they got the loan before they drove the price up, using other tools like the 401ks and the fund managers, using the laws and the Nixon type administrations that change the laws as soon as they buy in. Does that make sense? What I'm telling you is that for you to get rich, you have to do what these guys did. You have to buy into something, and then you have to make sure that you're the last people that can do this by paying off governors and senators. And you close the door behind you. You burn the ladder beneath you. Is the only way you can get rich. And now I'm thinking, with everything I know, with all my brain power, with all my little IQ points all put together, can I out-earn this curve? My fucking God. It's like, can I do that? I know guys with like 200 IQ points that can't out-earn faster than this curve. What do we do? But now that you know that this is this is your pace car. This is your pace car. If you're an Indy driver, this is who you have to beat. You don't have to be the fastest, greatest earner in the world. If you and a buddy are getting in the forest getting chased by a bear, you don't have to outrun the bear. You just have to outrun your buddy. Now you see why I'm pissed off? How do we do that? How do we outrun our buddy?